Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Time to get into it as we look forward to what's on tap in the coming days for markets to focus on. And of course, we are coming off the back of new highs on Wall Street yet again after the Fed Chair Jerome Powell giving his Jackson Hole Symposium speech, raising the expectations of rate hikes next month. Let's break it all down. Mel Siew, he is the portfolio manager for Asia Public Credit for Muzinich Company. Good morning, Mel. How are you doing today?
Morning, Ryan. I'm great. How are you?
I'm doing good as well, and lots to talk about, so great to have you on the show. Let's start first with that recap of the Jackson Hole Symposium. Walk us through what exactly Jerome Powell said that really is lifting markets right now as we head into the Monday opening.
Sure. So on the near-term outlook, it does seem as if he's signaling markets to get ready for a cut in September. He described monetary policy as restrictive, in his own words, modestly restrictive. And despite the unemployment rate being well-behaved, he did note that that was due to not only a reduction in demand, but a reduction in supply as well. So he noted that the downside risks to the employment side of their mandate had increased. So that does suggest that they will be focusing on the employment data, putting a bit more weight on that. We saw in the last non-farm payrolls figures that there was some downward revision. That was quite a major downward revision if you look at the past 5 or so years of history of these revisions. So that's where the focus will be. And on the PCE numbers, that's obviously the big data release coming this week. And I think that's something that you might want to ask me about as well. So I'll stop there.
So a lot to unpack there. What do you take away from his tone as well? Because we were widely expecting rate cuts in the next month. Was this coming through with a stronger message or signal in that sense?
Yeah, so he's still trying to keep the Fed data dependent. So not trying to signal too far in advance. But I think the most recent data releases do suggest a bit more a balance in the mandate. And if his view is that the current monetary policy setting is modestly restrictive, then that does suggest that they should be getting a bit more into balance. What was interesting as well in the last meeting was, they had a couple of dissents. And this is an institution that prides itself on consensus, and you generally don't see consent. And I think if Powell has a really strong view going into the next meeting, he will be able to bring the committee in line with his view. So you've got a lot of speakers coming out against cuts, for cuts, but I think his view is the one that really does matter.
Yeah, this speech, of course, is significant because it is set to be his last one, at least Jackson Hole-wise, as he comes towards the end of his term. So politics in the frame as well. A lot of questions about how much that played a part in his speech or will play a part in time to come, the meetings and the rate policy settings. And one thing that could play a part is the data, like you pointed out. And we will get some data this week in the form of the PCE index, the Core Personal Consumption Expenditures Price Index, which is a favorite of the Fed to watch inflation, where it's going, as well as what's the expectations in time to come. And that's going to be a big part as we talk about tariffs, how that's going to be playing out. What are your expectations on the front?
So we're starting to see it tick up slightly. That is a reflection, we think, of the tariff impact coming through. It's been a bit funny, we've had the big announcement, the Liberation Day announcements, and then the pauses. So it's not really clear if the full tariff impact is being passed through yet. Maybe some companies are still hedging that there will be further reversals. How permanent will this policy be? But it's starting to sort of tick through very slowly. So that's something to be mindful of. I would sort of contrast that with the Federal Reserve's own summary of economic projections, right? So this is what they think these, certain key indicators of the economy will be at the end of the year. So for 2025, they're projecting, the median, the average sort of view is about 3%. So we're still some way from that, right? Sort of 2.6, 2.7% now. Maybe it ticks up to 2.8%. So there is still a bit of headroom versus where they think the rates, their own policy rate may be. And it's kind of split between no cuts and 2 cuts. So that's where, it comes back to I think Powell's view is very important here in terms of being able to sort of lead the committee between either of those outcomes.
Yeah, and also on tap, we've got data in the form of the second quarter GDP revisions. How much will that move the needle?
So this will be the second second revision. So, if I look back at Q1, there was a significant revision that sort of caught the market a bit by surprise. That was led by the volatility we've seen in the sort of trade flows from net exports as the tariffs were signaled. We've had that come in Q2. So I would expect there might be some volatility, but we're pretty set by where the first reading was a few weeks ago.
Data to watch out for, you've got GDP as well as the PCE index, and also earnings coming through. The big one, of course, coming through from Nvidia, and there are a couple of things here in the mix. You've got what's playing out in terms of AI and also a bit of China as well. What is going to be the impact or the significance of the report card from Nvidia?
We've had the view that the AI euphoria is pretty real, right? So you've seen Nvidia surprise expectations for several quarters in a row. That may well be the case this time. And I would point to the greater prevalence of AI. You see it in your individual handphones. You see it in workplace computers now. That is leading to great demand that's spreading out across many different sectors of the economy. And that is supporting the demand for data centers and Nvidia's own products. We see that in the supply chain in Asia as well. So some good earnings as well from some of the local Korean chip suppliers. So I would expect to be a good set of numbers again.
Yeah, how much of a rising tide is this going to be for the rest of the technology sector? Because we also have other earnings coming through from other tech names like Alibaba is going to be in the mix as well.
Yeah, that's right. So the China tech space has had a good earnings season as well so far. If you remember at the beginning of the year, there was the DeepSeek surprise. So that ecosystem, I think, is developing very well in terms of how they're getting their own AI systems in place. And, there was some noise, I guess, around Nvidia and the H2O chips that they're licensed to sell into China. So some noise around that. But I think they are working very hard at trying to be self-sufficient in that area as well. I mean, that's a goal in terms of the national security concerns across a variety of sectors as well.
Okay, a few more catalysts to watch out for. You've got Nvidia earnings. You've got also the PCE index. Of course, we are coming off the back of new highs on Wall Street last Friday. And helping us to break down what to watch out for, Mel Siew, Portfolio Manager for Asia Public Credit at Muzinich Co. Mel, thanks for your time and insights this morning.
Thank you very much.
All right, we'll catch you next time. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.